Good morning, everybody. Welcome to today's live stream. Let's talk about Bitcoin. Thank goodness. We've had some really good compression and expansion cycles. Allow me to record this on TradingView as well. All right. So we have our 8-cat indicator loaded up, which defines expansion and compressionary periods. First of all, with our previous uptrend, we had a very clean, defined upward trend as defined by the purple line. As long as price action maintained itself above that value, we did really well. Of course, with the teal band acting as swing high and swing low buy and sell indications, right? Whereas if we touch the top edge of this teal line, that's a sell signal. Whereas if we touch the bottom of it, it's a buy signal. Of course, there's also the bullish CCI rolls for the relative 1/10th period of the longest overexpanded period. And of course, the green band is our compressionary ranges that form from our longest compressed period, which is defined by volatility overhead. Right? And so that's our swing highs and swing lows. So that works out very well for us. Now, what are we seeing in current price action? We're having our significant trend, which worked out really well. Then we entered the mean reversion condition, at which point I predicted lateral trading and compression, which is exactly what we got before finishing the mean reversion condition, right? If price action runs up and touches the mean of the mean reversion condition, right? Because it's a mean reversion condition, price goes to the mean. The condition ends. So, what do we have now? Well, honestly, not much. Our CLCP has currently ended, right? Which briefly implies expansion, but there's very little actual expansion happening. Right, because the compression range is ended. So if the compression range is ended, it means price can trend. It doesn't mean it is trending. We have a completed mean reversion condition, which means well, the condition's over, so we can't bet on anything else here. Really, I have very little to say about this chart on the 1 hour. All right, if you take a look at the daily, things change just a little bit, and I am going to switch this to candles so we can look at the wicks. We are going to change this to a standard band length on the 500 period. Beautiful. All right, why the 500 period? It's very similar to the weekly 50. So what do we have here? We have price action maintaining itself on the 1.25 standard deviation of the 50 period, which has been a reliable benchmark in the previous bull run. And I think the next time we test on that 500 period 1.25 standard deviation, I am going to place an aggressive buy order. We'll see if we actually take time to hit it though, right? I think we will hit it eventually, because it was the trend definition for the previous bull run. And well, what are the chances that we're actually seeing that same pivot happening now? You know, we can go to the weekly chart and see something very similar happening where the 50 period does maintain price action very well. Although the 500 daily is slightly more accurate, so I am inclined to use that. Right, now we have currently 3 tests on that value. I would not be surprised if we saw a significant wick to the downside, which would be the liquidation wick. Right. Liquidation wick would scoop out all those long positions before running price up further. Of course, trend continuation is your best bet at this time. And we are just forming this super obvious bull flag, which in turn does introduce a lot of additional risk on that front as well, right? Because if you have a super obvious set of stop losses all right here, well, it makes sense for big players to scoop up those stop losses before trend continuation, right? We saw this in gold pretty recently. So do be aware of this kind of aggressive stop hunting price action, right? Where we have the significant bull flag, right? Where everybody draws it, everybody pulls liquidity on both the top edge and the bottom edge. So when price action does break out, oops, just kidding, we're going to go back down, right? They scoop up the liquidity, and of course the opposite happens to the downside before trend continuation. So really, if you get super obvious structures like this, just be aware. And you can even have a safe bet like so, where you can actually place a buy order around 8,700 with a stop loss like around 8,300, and then predict that the stop hunt will happen, right? It reduces a lot of risk, and it also means that you're less likely to actually gain in on trend. However, well, since we have such a nicely defined 500 period, of course, we can also just bet that we'll get trend continuation, right, based on that 500 period bounce. So either way, we have a couple good positions to bet on this week. So no complaints on this front. A cat with charts told me to take a look at FUSD. The 4-hour chart with ACAT, because there is an implied short position based on the longest over expanded period. We're just going to need to give ACAT a second to load that in. Beautiful. All right, so if we have a really clean trend definition like this, like we're seeing here, we can short pretty reliably, right? We have an aggressive downtrend, betting on trend continuation is good. If we break inside this band, cool, we'll see mean reversion, and mean reversion at this current time is 30%, but until that occurs, betting on trend continuation is nice. So, you know, even if you're betting on, 8% downside with a 2% upside, that's good, right? It's a 4-to-1 profit ratio. Very little reason not to take this trade. With that in mind, I'm going to check the YouTube comments. If there's nothing, I'll be done for the day. Nope, nothing done for the day. Cool. It's been a beautiful afternoon. I'll talk to you folks tomorrow at 1 p.m. MST. Have a good one. Ciao.